Holy smokers, this ain't no dang jokers. We have busy times in the stock market, folks. Flapjacks are being flipped all over the place. I got an action-packed video for you here today. We got a lot of things to discuss, okay? First off, people are not feeling so optimistic anymore now about Fed rate cuts in 2025. We're going to speak about what's going on here, the inflation data, the trends we're seeing, so everybody can understand, is the Fed likely to lower rates, raise rates? What's going to happen here, okay? We got problems even inside one party right now where Mitch McConnell's coming out saying, watch out with these tariffs, that's going to raise prices, right? Meanwhile, we have the fight that I told you guys this was coming, right? I told you guys this fight was coming. It's getting interesting now. Trump's now flipping. He's saying interest rates should be lowered, something which would go hand in hand with tariffs. Let's rock and roll America. This is going to get real interesting. I'll explain to you how this whole game will end up playing out. I bought and sold a ton of stocks over the past few trading days, including today. I made moves. I'm going to show you what I made, why I went ahead and did it. A lot of things going on inside my portfolios right now. I also want to address this. This is kind of something I get quite often when I say, hey, I don't mind if the stock market goes down. I love to buy stocks, right? And this is something I hear quite often. Well, it's easy for you to say you're a multimillionaire, these sorts of things. And, what about us little guys out here that are just getting started? Listen, I'll explain to you that whole game in this video as well, okay? I need one thing from you guys and one thing only, and it's for you to smash that like button. That's the only thing I need from you guys. I got the sign in my garage for a reason. I appreciate y'all for being here, and also everybody that's subscribed to the channel. Thank you. I appreciate each and every one of you for being here. It's incredible. I don't even know how many subscribers we're at now, but it's a big number, and I appreciate every single one of you guys, okay? Additionally, I'm doing a one-day Valentine's Day sale for you guys, 1000xstocks.com, that will be pinned comment down there if you want to access a deal. When it drops, we're less than 48 hours from that deal showing up. That will be the entire research platform. So the search feature, the ability to compare several stocks against each other with mandatory metrics and advanced metrics, access to the earnings calls, access to SEC filings, access to our projections tab, and we're hoping to have our advanced projections tab up, I'm hoping on Friday if the team can get it done by then. Additionally, you have financials and our beautiful charts feature as well. And then for a lot of you guys that are in your first year or two, a lot of you guys need our metrics, so the definitions of everything, and then you also need this education portion. So once again, for access to that, that will be the pinned comment down there. Enter in your info and we'll send over the deal when it does drop, okay? Alrighty guys, let's get going. We got a lot to get into in this video here today, okay? So, I get this comment quite often, is nothing new. I've gotten it many times over the years, right? And it's basically a comment around, hey, I'm newer to the market, got a smaller amount of money, it's so easy for you to say, you want stocks to go lower, I want stocks to go higher every day, those sorts of things, right? And so one is, I had this same exact mentality when I had like less than $1,000 to my name. When my first investments were like $300. The same exact mentality. At the end of the day, I'm not planning on selling stocks anytime soon. I need to build my wealth over a long period of time. And so when you start to adopt that mindset, you don't get flustered by the fluctuations. As long as, what is the number one thing I always tell you guys? The number one most important thing to being a great investor over everything else? Income versus expenses. Making sure every month you have more income than expenses. It's the number one biggest key. Before you worry about income statements, before you worry about balance sheets, before you worry about SWOT analysis, before you understand what a forward P is versus a trailing 12-month P and why that matters, before you understand about price to sales ratios versus peers, before you understand about growth rates versus Ps, before you understand about how to run projections on companies, there's one key thing. Income over expenses. If you don't have more income than expenses, your number one thing you have to focus on before anything else is putting your financial life in a situation where you have more income than expenses. Once you do that, then we can start discussing all the other things. And so being that I've always been a person that's always had more income than expenses, even when I was a minimum wage worker, all the way till I was making $40,000 a year, $50,000 a year, till I had $100,000 to my name, till I became a millionaire, becoming a multimillionaire, all those sorts of things. Always had more income than expenses and always lived a lifestyle that was far below my means, and that's including today. The lifestyle I live, the cars I drive, the home I live in, the homes I own, those sorts of things, so far under the lifestyle I could technically afford. But what do I like to do? I like to invest. I like to invest. I like to invest. And so I'm very understanding, like we're building this pie to become a really large pie, right? So then when you do end up going on future vacations, buying future homes, cars, retiring, whatever it is, it's little potatoes to you compared to the pie you built, which is absolutely massive. Okay, so it's the same exact mentality. And I could take it even one step further. I could say I've got a lot more to lose. Like let's say my portfolio went down. Everybody's portfolio is down 30%. Who's got more to lose? Somebody that has their first 5K invested or somebody like myself? Certainly I have a lot more to lose if we're talking about 30% down. If you have $5,000 portfolio, right? You drop 30%, it's $1,500. That's not changing your life. That's not changing anybody's life, $1,500. Matter of fact, I would say the far majority of people watching this video right now, the far majority, your rent or mortgage payment on just a 1 month basis is more than $1,500. Let me know in the comments section if your rent is more than $1,500 a month or if your mortgage payment is more than $1,500 a month. I would say the far majority of people watching this video right now, your mortgage or your rent is over $1,500 a month. So $1,500 a month is it's just not changing your life or anybody's life. However, if you have $5 million portfolio and you go down 30% on that, that's last time I checked, that's around $1.5 million. What could you do with $1.5 million? Well, you could go use that as a down payment to buy the big boy mansion. Yeah, Floyd Mayweather, he's selling his house there in Southern Highlands. 12,700 square feet. What a beast, man. Yeah, you could use that as a down payment. You could also go down to the Las Vegas Ferrari dealership. You could get yourself this 488 GTB. You could also get yourself this 488 Spider right here. You could also get yourself this 296 GTB with less than 2,000 miles on it, this blue baby right there. And you could also get this F8 Spider. Oh, look at that baby with only 2,800 miles on it. And you still have a bunch of money left over. You would have a fleet of Ferraris and still have a bunch of money left over. You could almost afford a heart transplant. Not quite, unfortunately, but almost you could do it, right? On $1.5 million, you could travel the entire world. I'm not kidding, like the entire world. People have traveled the world on far cheaper than $1.5 million. You could be living good and traveling the world on $1.5 million. I can tell you that much. Like, you can see everything that's worth seeing in this world on $1.5 million. I can tell you that, right? So there's just a lot more to lose there. And that's the thought process I need to get everybody in. Don't fear downturns in the market. Don't fear market corrections. Don't fear market crashes. When you get those opportunities, say thank you. And as long as you got more income than expenses, you never fear that stuff. You're looking at it and you're like, let's go, baby. Like, send the market down. I'll be happy to buy. That just means more money I make long term. When Meta went down to $88, you think I was like, oh my gosh, crying? Was I making video? Oh, Meta. No, of course not. I was making videos talking about how I just dropped $70,000 in Meta stock, how I just bought Meta stock, how I just bought Meta stock, right? Because I was very understanding, oh my gosh, like this just means I'm going to make so much more money. Would I rather bought Meta at $88 or $388? I was able to buy a whole lot more shares of Meta than I ever thought I possibly would, right? And you can say that for the whole host of the stocks that are in the public account, for instance, right? You just be thankful for those times. Don't fear them. Welcome them. You told me S&P goes down 20% the next 6 months. Cool. We're ready, baby. We're ready. Like that's the thought process. You can't fear this stuff. You got to run toward the fire, not away from the fire, okay? No. Additionally, I just think this is important, right? If you get two 10Xs in your entire lifetime, right, which we have several of those 10Xs in the public account, for instance, you just get two 10Xs in your lifetime, starting at 10K, which is not a lot of money, you're already at $1 million. Isn't that fascinating? You get three 10Xs in your lifetime. You're at an 8-figure portfolio. 8 figures with three 10Xs in your lifetime. That's fascinating with a relatively small amount of money to start. Like 10K? And nowadays, like, what does 10K get you nowadays? Come on, man. Like, you can't even get a house down payment for 10K. You're not even close to that, right? Like, let that sink in for a moment. 3 10Xs completely fundamentally change your life forever. Or you could say a lot easier route is the 2X route, right? Because stocks 2X all the time. That's nothing new. 7 2Xs in your lifetime, and you completely change your life, right? You get 7 2Xs in your lifetime, you'll likely be 7-figure, 8-figure net worth. That's fascinating, right? So, important that everybody understands you got to get this ball rolling, and you got to understand you are under a shot clock here, right? Life is not forever. Like, if we all live to be 1,000 years old or 10,000 years old or 100,000 years old, or we all would just live forever, right? There'd be no rush to get rolling with investing, to start taking it serious, because why? Like, you have all the time in the world. Well, we don't have all the time in the world, right? What is average life expectancy? I don't even think it's 80 years old. So you're under a shot clock here. If you want to do the things you want to do in this lifetime, you better get serious about it quick, or, things will just pass you right by, right? So do something to keep in mind there. Now, rate cuts. Listen, okay? Yeah, rate cuts are getting more and more difficult. And I mean really, really difficult to get the Fed to cut rates more. And the reason being is, you look at the latest inflation data, it's not at a point where it's like, oh my gosh, we're in a disaster, but it's not in a great place. And here's why, right? All items were up 3% on a year-over-year basis, but energy's bailing us out right now. And I would not count on energy continuing to bail us out. Energy's only up 1% on a year-over-year basis. That's really bailing us out. But I mean, you look at a lot of these categories, like bacon up 6% again, beans, peas, and lentils up 5.6%, uncooked ground beef 5.5%. You got to understand, a lot of these categories are outpacing wages, right? Because a lot of people aren't even seeing 5.5% wages up year over year. If you are, then that's good. But a lot of people are not seeing that, right? So that's an issue. Additionally, you look at some other very important categories that most people have to pay. Motor vehicle insurance is just stupid still. Up 11.8% year over year. And from what I hear, it's not done going up. I heard motor vehicle insurance is going to keep going up for the next year. It just is what it is. And so that's not good, but I can tell you, most people got to pay that insurance payment. And so there goes an extra $50 a month out of their pocket toward motor vehicle insurance, right? Motor vehicle repair, you better hope something doesn't break in your car, 7.4% up year over year. Airfare up over 7%, you better not need to fly anywhere, right? Veterinary services, something goes wrong with your pet, 6.6% up year over year. So we clearly, look at apparel, like we clearly still have problems with inflation, right? Like it's, it sucks because it's coming back. Like, it felt dead, and then now it's kind of coming back a little bit, huh? 4 months straight up now with CPI. 4 months straight. And we haven't even dealt with any tariff situation yet. What happens if tariffs come down the road? That's going to cause inflation as well. So this is just not a great situation, and I think it's going to be harder and harder for the Federal Reserve to cut interest rates if you see that CPI go up month after month after month. It's not in a place where you need to panic yet, but if you start to approach a 4% number at this year, people will start to panic. You will start to have panic in the market. If we talk about CPI starts approaching where the Fed funds rate's at right now, by that time, everybody will be lost their marbles. It won't be a good situation, right? Now, remember I talked about commodities, I talked about oil earlier, right? This is a 3-month chart here, and oil's up over 4% in the past 3 months. The GSG, the commodity index in general, is up 8% in the past 3 months. So, we have some stuff we got to be concerned with here. And what does that mean for monetary policy? Now, that leads us to, we have even nervousness inside the party right now, right? Inside the Republican Party, Mitch McConnell, he says, a trade war is going to raise prices. And he's not wrong about that. Long term, you can make a debate if tariffs and trade wars cause prices to really go up. But in the short term, there's no doubt it'll cause prices to go up. So there's nervousness inside the party. That's a whole situation we're dealing with, right? And the fight I told you guys is coming, between Trump and Powell. And Trump just very recently had said, oh, yeah, I wouldn't have lowered interest rates. I think that's fine what they did. But he shifted tone now. And he says, interest rates should be lowered. He came out today saying that, right? So he wants interest rates lower. And here's the thing, okay? We haven't even gotten to the scary part yet, because I don't know if you guys follow my reaction channel, Jeremy Lefebvre Makes Money, right? But I did a video reacting to a bunch of stock market kind of commentary and whatnot, and kind of giving my opinions and perspectives. I called the video, This Market's Hanging On by a String, right? And if the string gets cut, and let's say the market starts to go down, right? Which it might not, but let's say it does. You have no clue the drama show that's coming between Trump and Powell. It is going to be max level drama. Because today marked, in my opinion, the first day of kind of the battle starts. Of Trump kind of wanting interest rates lowered, which, by the way, if the Fed does lower interest rates, doesn't guarantee like mortgage rates are going down or anything like that, because that's controlled by kind of the long end of the curve. So that is something to kind of keep in mind here. But this marks day one of the battle. But the battle won't get ugly unless the market starts to get ugly. If all of a sudden you see S&P 500 go down 10% or something like that, woo-wee, or even like a 7% move, I can tell you things will get ugly really quickly. And you will have a battle between Trump and Powell, where Powell's going to have to stand strong if inflation data continues to be, let's call it, in a weaker place, or he's going to have to bend the knee, which he did back, kind of at the end of 2018 going into 2019. And that's going to be interesting. But the difference is this time, Powell's on his way out. Back then, Powell, I'm sure he had ambitions of being at the Fed for a long time. This time, Powell just wants to probably finish, like my opinion on what Powell wants to do, he wants to finish out his term and worry about his legacy. And so he probably just wants to finish out strong and do whatever he thinks is best and then dip and be like, I'm out. If he starts to, let's say, lower interest rates prematurely, that could cause a dynamic essentially where maybe inflation starts to roll even higher and then he's going to leave and then his legacy is the guy that caused 2 batches of huge inflation because he already gets, somewhat blamed for the first batch of major inflation, right? So that's a whole situation. That's going to be a drama show and that's going to be something the market's going to have to deal with. But the real fight's coming if the market weakens. That's the key. The market weakens, ooh boy, are we going to have a showdown. And that will be highly entertaining. And it will be highly volatile for the stock market, and you'll get some massive downward moves for the whole indexes. But for now, it's just a little jab. It's just a jab to start the fight. Okay, listen, I've been buying a lot of stocks. Oh my gosh, I've been buying a lot of stocks the last few trading days here, okay? I just want to just go over them, talk to you guys about some of these moves here, okay? AMD. On Wednesday, I bought 325 shares of AMD on February 5th. I got those shares at $110.29. That was almost a $36,000 move. By the way, in terms of these moves I made here, some of these moves were me moving money from like savings, just kind of cash stacking for quite a while to buy some of these stocks. Some of these stocks where I've cashed out some huge profits on some stocks and sold some shares. And so, that's kind of where some of the money came from. So it's a little bit of a mix of everything here. Elf Beauty, this one, 150 shares I bought. This was before earnings at 87.07. And so I don't usually buy stocks right before earnings, but I was just I was more scared of if Elf went up on their earnings, right? And next thing, because you got to understand, like when a stock like Elf starts to get momentum again, it's gone. Peace out. And you're not seeing it at those prices again. So my fear was more like, let me put a little bit more in Elf here, just in case the stock rolls, and next thing you know, on earnings, after earnings, it's back up to 100, 110, 120, something like that. So that was my thought process around Elf. Because as somebody that's buying that stock for the next several years, like I believe Elf's going to eventually be $200, $300, $400, probably $500 a share. So for me, at 87, it doesn't matter. It doesn't matter as long as the stock does what I think it's doing over the next few years and goes 200, 300, 400, 500, even higher than that. We'll look back at whether I bought at 60 or whether I bought at 87 and we'll just be like, dang, that was a good buy. You know what I mean? Short term, I never worry about the short term crap. I just more worry about not investing heavily enough before a stock starts to make a major run. And then I get caught up into the game of it's up so much, maybe I'll pull back. No. At the end of the day, 87 is going to be, in my opinion, a silly price a few years from now, and so buy it at 87. That's just kind of my opinion and perspective on that versus take a gamble. Don't buy it. The stock rolls higher, and then I'm stuck in a situation saying, why not buy another $13,000 worth of Elf, right? I bought Nike. 28 shares of Nike on Wednesday, February 5th, $74.63 there. That was a little over a $2,000 move in regards to Nike. Then we obviously had the Elf crash, and I said, sweet. Thank you very much, Elf. Thank you for this beautiful gift you have given us. And I went ahead and bought 400 shares in this portfolio. $70.48 I paid for that. So I already thought Elf was a steal deal at 87, right? It was already a steal deal. And then you give me Elf at 70? Thank you. Thank you very much, right? And this was over a double up move I made there. That was a $28,000 plus move. So you notice I didn't go all in Elf the day before earnings. I was kind of understand, let me get a little more position here in case it rolls. But if it crashes, I got the dry powder ready to rock and roll. And that's exactly what we saw play out there, right? Nike, 182 shares of Nike on Friday, February 7th, $69.86 there. That was a $12,700 move in regards to Nike. I look at all these prices I've been buying Nike at recently, and I'm just like, this is so easy. This is so easy, man. They're putting the game on easy mode for me in regards to some of these stocks right now. Like, that's the most beautiful thing. A lot of these stocks, they're not even like risky companies. That's the best part. It's not like I'm having to go way out on the risk spectrum and having to buy like some company you never heard of, right? That's got some business model that we don't know of, and it's some massive money loser, and it's like, oh, we don't know about this one, like, some new industry, and like, maybe, or maybe it's going to go BK. No, like, I'm just getting gifts on like incredible companies that have incredible business models and incredible brands that are going to be highly more relevant 5, 10, 15 years from now than they are today. And the best part is these stocks are so easy to hold over long periods of time. Like Nike, I'm not going to feel like a rush to like, I got to sell Nike. Like, it's the time. No, like same thing with ELF. Like, I'm getting it's just gifts, man. It's gifts and gifts and gifts. And speaking about gifts, AMD on Friday, February 7th, I bought another 81 shares of AMD, paid $118.14 for those ones. That was around almost a $9,000 move. Thank you very much. Obviously, on the main channel here, I've been talking a lot about stocks I'm buying right now, including this video, 6 stocks I'm buying now, February 2025 edition. Additionally, I did this video. I'm not sure if you guys watched this one. If you care about ELF, you probably watched it. ELF's a little bit more of a niche stock, so I understand it's not like going to always get the biggest view count. But keep buying ELF stock and don't stop. I don't know if you guys got to see that one, but it looks like about 89,000 people have seen that so far. And then this one, keep buying AMD and don't stop. And this one I did the day after earnings, and I think that one's just an incredible opportunity right now for anybody that's got a longer-term vision of a few years down the road, right? Went ahead and made this move, Celsius. This was on February 4th. I bought 890 shares of Celsius. A little over $20,000 I paid for those shares, $22.99, right? Keep in mind in Fidelity, it says margin, but I'm not actually like buying on margin in terms of like margin out my portfolio. I have $0 on margin. It's just the money in order to clear and not get like trading patterns and all this crap that Fidelity will track you with, and then they label you a day trader and stuff. Usually you have to wait 3 days for everything to clear. I'm able to do it right now. So for instance, if I did a deposit of $500,000 into Fidelity right now, right? The money's not going to be in Fidelity's hands technically at that point, but they would let me buy $500,000 worth of stocks right now. Like literally right now, I could go do it. If I didn't have my account set up that way, they wouldn't let me do that. They would make the money clear, which usually takes around 3 business days for the money to clear. So just something important to kind of understand in regards to that. EL Estee Lauder, because it's not a good time to actually be on margin. It's not. It's like, it's never a good time to be on margin, by the way, but especially not right now with market near all-time highs and with what you have to pay for margin interest rates. No bueno. Way too risky. Estee Lauder, EL stock. This was on the February 4th. I bought 185 shares of EL. I paid almost $13,000 worth of shares there, and I paid $69.57. EL's just incredible brands, and EL was one of the stocks I mentioned in this video here today. I mentioned basically one of the stocks of those 6 was a pair investment. It was ELF and EL, and I kind of went into details on all the brands. Like, people don't understand how powerful EL is, and they don't understand like how much long-term opportunity it is as the company's financials fix over this next, I would say, 12 months here. Because if I look out to EL 12 months from now, I think their financials will be completely fixed. I think their margins will be fixed, their revenue story will be fixed, and their bottom line story will be fixed. If we look, and that's just 12 months from now. So the turnaround happens over this next 12 months. And, good luck getting this at $60 after the turnarounds happen. That's all I'll say about that. Good luck. Monster, the Monster beverage. Obviously, a pair investment to go along with Celsius, just a much smaller buy. But this was on February 4th here, 25 shares, $1,100 move there, $46.56. Monster was one of my best stocks back in the day. Monster's not going to give me those sorts of returns nowadays. No. Monster's just a good, solid company nowadays to invest in. It's a way different place. Back in the day, which was like, nearly 15 years ago now, when I was buying Monster back then, this was like a game-changing stock because the market capitalization was only a few $1 billion on this one, and it was just an incredible opportunity. It was a fast-growing brand, right? They went through some weakness at that particular time, but I'm like, no, this company's going to keep growing. They'll be fine long-term, right? And it was Beautiful stock for me. So Monster is not what it used to be, but now it's just, I would look at it kind of like a little bit of a more aggressive growing version of like a Pepsi or like a Coca-Cola, one of those sorts of companies. So a little more exciting than those guys, right? And I would look at Celsius. Celsius reminds me a lot of Monster back in the day, essentially, right? And the market cap's actually kind of similar. It's only a few $1 billion on that one. AMD, another buy here, 99 shares, $109.95. That was around $11,000 move there. Also on February 6th, bought another 100 shares of AMD, $109.94. Looks like it just had to go through in some different batches because it was kind of a big buy there. February 6th as well, 424 shares, $109.94. Yeah, about $46,000 move. So obviously very aggressively investing into AMD right now. AMD is just one of the best opportunities I see out there in the stock market in the tech space right now. A lot of the tech companies have had huge runs the past few years, and AMD's kind of been a lagger. But there's so many great developments going on with AMD's business model, with them purchasing other companies and positioning this company for the next decade, that I think a lot of people are just missing out on this one, and they should do a little more digging here. They should go down the rabbit hole a little bit more and understand Lisa Su's position, this company in a great position. And, this is another one that's just a gift, man. You get anything that's, in these low hundreds, and if for any reason the market goes down in a bunch and then AMD goes under 100, you just be thankful. Be thankful, man. That's all you can say. Celsius Holdings, this one, 600 shares here, $21.95, over a $13,000 move. Once again, Celsius just reminds me a lot of Monster back in the day. Just a much more, just very aggressive growth company. Going through a time period right now when everybody's confused about growth because the Pepsi distribution deal went insane. Then they had to clean up inventory, right? 2025 kind of starts a reset for that, and I think 2025 sets up to be another year of getting back to growth for Celsius, and I think the growth for Celsius will get stronger as the year goes on, which I think is pretty darn compelling here. And then the international expansion opportunity for Celsius over the next few years is pretty immense. Oh, about another 844 shares of Celsius here. $21.95 for those shares, about an $18,000 move, a little over $18,000. EL, this was also on the 6th, February 6th. Bought 200 shares here, $12,800, $64.15. I got the one for. Oh, man. Thank you. Monster. 405 shares here, $18,700 move there. So rather bigger move, but it's because, I'm buying Celsius pretty aggressively, so I got to continue. I'm trying to do like a 2-to-1 ratio of like $2 in Celsius for every $1 Monster. I'm trying to keep it roughly around there. So pretty big move for me in regards to Monster. And remember, Monster owns Rain Energy. They also own Bang Energy. They also own some other energy drink brands, but they are massive market share. Their market share is pushing close to 30% now of the energy drink category. Nike, 625 shares of Nike. This was a $45,000 move at $72. Clearly, these companies are very attractively priced. I'm not going to be putting this sort of money into these stocks unless they're very attractively priced, right? Like, this is big boy money now, folks. AMD. Speaking about big boy money, I bought 5 shares on February 7th at $109.01, okay? Big boy money. 45 shares of AMD on the 12th, that was today. A little over a $5,000 move, paid $111.68 for those. And I did sell some more Palantir here today, cashed some more profits there, 277 shares, $117.29 I got for those shares, so around $32,000. So I still have around $27,000 or $28,000 to invest. Likely tomorrow, I'll figure out what I want to do there. I'm trying to figure out, do I want to hedge? Do I just want to buy some more Nike, AMD, Celsius, stocks like that? Kind of figuring out, obviously, Palantir is just an incredible bull run right now. This will not last forever, but, could it last maybe a few more weeks or a few more months? It's definitely possible. If they come in next quarter, have another blowout earnings and then another great guide, we could keep this momentum going for a little bit. Obviously, the valuation's getting ridiculous. Palantir, best case scenario, probably does $4 billion of revenue in 2025. And the market capitalization of this company's, if it keeps going up, it's going to be pushing over $300 billion. So we're talking getting close to 100 price to sales ratio. So, even if you were to say company gets to revenue of $10 billion over the next few years, which is possible, at the market cap we're at right now, if we're pushing close to $300 billion here very shortly, I mean, that would still be a 30 price to sales ratio. And that's based upon revenue that's years away from hitting. Like, it's not like we're hitting $10 billion this year or next year. Like I said, we'll be fortunate if we get to $4 billion this year. $10 billion is still several years out. And so the valuation is just getting ridiculous. But we're in a very hyped up bull cycle in regards to Palantir. So as a bull, as somebody that's held these shares, like, it's just a gift, man. I'm just like, okay, thank you. I'll gladly keep taking profits on this in regards to that, right? So Palantir is a rare example of a company that is just like making everybody happy. Like, the short-term traders are happy that are just keep buying calls on it and keep kind of playing the short-term game. The long-term investors like myself are happy because we're just getting to take ridiculous profits on this stock, right? I mean, look I'm up 1,476% on the shares I have remaining here in Palantir. It's insane, man. You know, current value 293 and then total gains 274. Like, it's just insane, man. Thank you. Bigs. So AMD and Nike, they've now big positions in the public account. Like, these positions are really going to matter over the next few years. And if AMD and Nike perform very well over this next 2-3 years, it's going to be very good news for the public account overall. And I expect them to perform very good. And that's regardless of the economy. I don't really care what happens with the economy, what happens with the stock market. Like, AMD and Nike should do, because the stories are so good for the next couple of years in terms of keeping costs down and the revenue rise over the next few years. Like, regardless, Nike and AMD are in a great position to prosper over this next 2 or 3 years. And so I think those positions, if we look out, you know, a couple of years from now, I wouldn't be surprised if both of those positions are $300,000 to $500,000 positions, if not even larger than that. So looking good there. And then Celsius and Estes are what I call little bigs. So they're under $100,000 positions, but they are decent sized positions in themselves. And so, you know, Celsius is a really attractive opportunity. If it went down on earnings, it'd be even more attractive. But even here, man, in this like $20, $21, $22 range is just incredibly attractive. The risk reward there is pretty darn exciting, right? But like I said, I just like to pair it with a monster investment as well, which couldn't fit on the screen here, but I like to pair it with that monster investment just in case I'm wrong with Celsius, right? Then Monster's the biggest beneficiary of that, right? And then EL's kind of into a little big now. This is one that I'm just like, I'm so bullish on this one the next few years. This is more of a turnaround play. You know, all these companies kind of have different things going for them. AMD's more of just a growth story. Nike's a little bit more of turnaround, right? And then Celsius is just, people are caught up in the short-term numbers. And then Estee is a little bit more of a turnaround play. Estee is a much bigger turnaround story, though, than Nike is in terms of Estee Lauder's been hit a lot harder. It's coming from a lot lower base. Nike's not that bad. Like, Nike's fall off is still anybody else's biggest success ever. So there's a difference there, okay? Alrighty, guys. Appreciate you joining me as always. Thank you so much for being there. That was a lot we covered in this one here today. Pin comment down there if you want to receive the Valentine's Day sale. It's less than 2 days away. Now, at this point in time, it is only hours away. You can enter in your email and your phone number, and we'll send over that deal when it does drop. It will be a one-day sale. That's for the entire education portion, projections, SEC filings, earnings calls, the ability to compare stocks, search stocks, and look at all these different features so you can figure out, are you getting great deals, or are you getting ripped off on these stocks? Because that is very, very important. Much love and have a great, oh, by the way, and we'll send you your Steel membership card in the mail to your house once you join us in there, okay? You bust one of those out on a date, you're going to have trouble getting rid of them. Much love and have a great day.